Hi, everyone. Welcome to the Personal Finance Workshop created by the Farm Credit Associations of North Carolina. My name is Justin Halama, and I'm a loan officer with Farm Credit in Salisbury, North Carolina. I look forward to sharing some valuable information with you as you help plan your finances today and prepare for tomorrow. Today, we'll be going over career planning and taxes. When planning your career, there's a few things you should consider: how much you make or your salary, the opportunities within that career field or the job that you choose, time off or work-life balance, and the benefits that are provided along with your compensation. Gross salary is the amount that you actually make before any taxes or deductions. Net salary or net income is what you actually take home. So this is the amount you're going to receive after all deductions and withholdings have been made. First, you have to understand your pay stub. There's going to be a lot of information on each pay stub you receive, but breaking it down will help you. First, you're going to see your company information, so who you actually work for or who pays your check. Your employee information, so who you are and where you're located. You should see your Social Security number or your unique identifier that's going to be used for taxes and documentation purposes, your employee ID or the ID that that employer places upon you. You should see your start date and end date, so what that pay period entails, when it started and when it ended, and the check date, so when you're actually getting or receiving that check. Below that, you should see your earnings. So what type of earnings are you making? Are you earning regularly? Is there overtime? Holiday, vacation? These are just some few examples. The rate, so how much you're getting paid hourly. And then the hours that you actually work. So how many hours did you work within that pay period and how it is broken down. The next field is going to be current. So how much you're making currently or for that pay period. And then year to date. So the cumulative amount that you've made in that year. Beside that, you're going to see your deductions. So this is all the money that's going to be taken out before you receive your net pay. Most of these are going to revolve around taxes or federally mandated items that you have to pay. Some other deductions are going to include the benefits that may be taken out by your employer to pay for things like retirement. You should see a current amount, which is the amount you're paying for that actual pay stub, and then year to date, so how much you've paid in that year so far. You're going to see your gross earnings, so the amount of earnings before taxes and deductions, both current and year to date. And then you're going to see your deductions, so you're going to see current and year to date, so within that pay period and for that year. And then at the bottom, this is how much you're actually going to take home. So this is what your bank account's going to see, your net pay. And then year-to-date pay. So once again, cumulative amount for what you've taken home. Taxes. No matter how much you dislike them, we all have to pay them. And you have to pay them one way or another. The most common ones are property taxes, sales taxes, and income taxes. So property tax is what you pay on real estate or any real estate that you may own. Sales taxes, this is what you pay when you buy anything. So when you go to the store or order anything. Income tax is what the state and federal government takes out of your paycheck or what you earn. Below, you're going to see the 2018 federal income tax brackets. You're going to see the percent of income. So this is how much is going to be taken out. Single filers, so if you're filing your taxes by yourself or individually, the brackets that fall within. And then married filers. So if you're married, are you filing it jointly? Let's take a look at 10%. So 10% of income will be taken out federally. If you are a single filer making between $0 and $9,525 a year, married filers, $0 between $19,000 and $50. Then it jumps all the way up to 37%. We all want to make more. The goal generally is to progress throughout our career and earn more of a salary, not only to stay along with inflation or prices, but to earn a better style or standard of living. But if you look at below, percent of income, 37%. So you'll be taxed at 37% if you're single at $500,000 or more. If you're filing married or jointly, $600,000 or more. But within that, you're going to see how much of your income is taxed, or the percentage that's going to be taken or withheld federally based on the amount that you make. Taxes can be reduced. So it's really important to understand accounting or understand taxes, whether it's going to be you're going to do them self or prepare them by yourself or have an accountant. It's really important that you understand what can be used to reduce your tax liability. Pre-tax retirement or investment plans are not taxed until they're withdrawn. So this is, for an example, this for your 401k. If you have a 401k through your employer, those funds that you contribute are going to be taken out before taxes are, okay? So they help reduce your taxable income. and they aren't taxed until they're withdrawn. So if you keep them in your retirement account, they stay tax-free. Roth retirement or investment plans, for example, these are another way that you can put in funds for retirement. They are funded after taxes have been paid, but if you meet certain requirements, they're tax-free for the earnings that they make while they're in an eligible plan. Make sure that with your tax return, or your investments, I should say, your retirement, that you make sure you know the circumstances or the stipulations that are placed on those accounts. Oftentimes, people take out that money or remove funds from their retirement account, and the tax penalties can be grave. Okay, so those funds for retirement, for example, are meant for retirement, so they're not available to just pull out as needed. There are emergency circumstances, but make sure that you understand the tax liabilities that are involved. So there's many other ways to reduce your taxable income or reduce your tax liability. Retirement are two of those ways. Some questions that we have: what is the difference in gross and net income? As we discussed previously, gross is going to be the amount of money that you make before taxes and deductions. Net income is going to be what you actually take home. So after all your withholdings, after all your deductions, your taxes, etc., what you're actually taking home, what you have available to use. What is an example of a tax withholding? One example could be your federal taxes. So everyone's going to have to pay federal income taxes, North Carolina, or state income taxes. Another tax withholding that you're going to have to pay, Medicaid, Medicare, items like that. Name one type of benefit your employer may provide to you. There's a lot of benefits, okay? So it's really important when you're sitting down with employers, you're looking at your career, what benefits are going to be involved outside of just the salary or the income that you're making. Some of the benefits could include a retirement plan, a 401k, or a Roth. Some employers still have pensions, medical, dental, vision, time off. Do they provide vacation? Do they provide sick time? Is there life insurance? These are just a few that they may provide. Some employers provide vehicles or reimbursement for travel. The sky's the limit with your benefits. Just make sure you know what you're getting, because it is part of your compensation. Do they match your retirement? Some questions to think about. So farm credit. So we went over a little bit about finances as far as your career planning and taxes. Here at Farm Credit, we want you to know a little bit about what we do. So the Farm Credit System, we're a member-owned cooperative. What does that mean? Okay, it means that we're not a corporation. We're not Apple or Microsoft, where we're owned by stockholders in the traditional sense. We're owned by our members. So in order to be a member in Farm Credit, you have a loan with us. So everyone that has a loan with the Farm Credit System has a vested interest in the organization, okay? So we're owned by our members. We were founded or established in 1916. And once again, we're member-owned and member-controlled. So our members, everyone who has a loan with us, dictates the direction of the company. We are founded by Woodrow Wilson as the Federal Land Bank System. And in 1916, we started long-term lending for agriculture and farming communities. In the 1930s, we opened it up to short-term and intermediate lending, especially with all the economic situations at the time. We've been in operation for over 100 years, and we continue to serve rural communities, agricultural, and farming. Our logo consists of leaves, roots, a star. The leaves represent the types of lending that we provide. The roots represent that our members and our borrowers are the core of our business and what drives us. And the star provides some light and direction into the organization. Every association uses this logo. Working at Farm Credit, we're team-based. It's a collaborative atmosphere. We look to build relationships not only within the organization, but with our members, with our borrowers, and understanding how we can help. Communication is key. We can't help you if we don't know, and we can't help each other unless we know. So we try to build fluid and open communication at Farm Credit. We play a major role in agriculture. There's not many agricultural lenders out there, but farmers need those resources to ensure that they're growing their operation and successful. We strive for face-to-face communication. In the busy world today that we live in, most things are done electronically, on your phone, on your computer, tablet, over the phone even. We still believe in face-to-face. We still believe sitting down with members, sitting down with borrowers, and understanding how we can help them, building that relationship. We have a lot of different opportunities within Farm Credit. Myself, I'm a loan officer, so I help originate and negotiate loans. I help to establish those loans for borrowers and to help understand their needs and how we can provide products that fit those needs. We have appraisers. So do you like valuing things? Do you like strategically investigating and looking at items such as real estate, farm equipment, livestock, crops, and understanding how valuable those items are in association to lending? Credit manager. So do you like numbers? Do you like crunching numbers and looking at and analyzing finances, taxes, loan processes? As a loan officer, they're hand in hand with us every step of the way. They help process all the loans that we're initiating, that we're negotiating, and that we're providing to members. Branch office coordinators help oversee the day-to-day operations within the organization. They help run each one of our branches and ensure that we have the administrative support that we need to get those loans out. Human resources. Every organization uses human resources. They're responsible for hiring. They're responsible for growth within employee development. They're responsible often for training and benefits. Everyone needs benefits and make sure that they're getting paid for the work that they provide. Operations, accounting, and many more. Here at Farm Credit, we're broken into 3 distinct farm credit associations. We have Carolina Farm Credit. That's the farm credit system that I currently work with. So we cover, as you can see, the majority of the western part of North Carolina. You have Ag Carolina Farm Credit, represented in blue, and you have Cape Fear Farm Credit, represented in red. Each farm credit system within North Carolina serves a different territory, but we all work together closely to ensure that all the needs of our rural communities, agriculture and farming, are met throughout the state. We currently have $1.7 billion in loans to over 11,000 customers. I want to say thank you so much for joining us through this exciting presentation and letting us speak with you a little bit about career planning and taxes, as well as farm credit. Feel free to visit our website at farmcreditofnorthcarolina.com or contact us at 800-521-9952. We look forward to working with you, whether it be for a resource, for a loan, or if you're interested in working with us. Thank you.